Welcome everybody to Navigating the Minefield, where I'll be talking to Eric Mrozinski about everything to do with macro, but more importantly, things like crypto, gold, and gold miners. Eric, good to see you again.
Hey, you too, Roger. It's been a little bit of a break. I feel like I haven't seen my girlfriend in a month.
Thanks. Well, you've been doing all those wonderful interviews with Rob McEwen and Rick Rule, which I think we're going to probably talk about next week in the next episode because there's so many learnings from that. But this week, I wanted to focus on a couple of things because obviously we've seen some interesting moves in gold, breaking out above the 2100 level, which was your important level. And we've seen a big move in Bitcoin as well. So we're going to get into those. Just before we do that, it's the usual. Obviously, this is all for engagement and education purposes. This is not investment advice. Everybody should do their own research, have their own goals and investment reasons, and do their due diligence accordingly. Now, with that said, I think I'm going to start in the old world before the new world. So gold, has it now made the decisive move that you were looking for? Does it need to break? I mean, this is the beginning of the month, 2100. Do we need to close above there at the end of the month for you to feel comfortable that this is a true breakout and not just another bit of a head fake?
Well, great question. I was just thinking about this in the last few days. And listen, I mean, if I tell you, like, we could do two different answers. One is going to be the official answer, the technical answer. The first answer is what my instinct is, and it's game on. Game on. The technical answer, though, which is what I use to buffer my own potential compass internally, is we've talked a lot about the monthly closes, right? You know, and the fact that I've wanted to see 1 to 2 consecutive monthly closes above that 2100. What we got instead was actually very interesting. We've had 3 monthly closes. So what is that? We had, is it 3 or 4 actually?
They were all above the pre-November highs. I don't think there were one consecutive high after the other, but they all closed above those pre-November highs. And I think even February did that. So yes. It is, you know, it's not going down, is it? That's, I guess, the key thing. And it's had a lot of opportunity to go down given things like strength in yields.
My sense is like gold, if because we're early in the month and we're looking at the monthly long-term closings because, you know, we are really kind of catering to long-term investors. Although, hey, I'm a trader and an opportunist and a speculator as well. I actually just went long gold on leverage in crypto via Paxos.
Of course.
And, you know, went in there for a scalp based just on the strength that I think we're seeing here we saw over the last few days. I did this like 2 days ago. So I don't know. I haven't checked my account this morning, but I'm probably up on 10x leverage. I'm at least up 25 or 30%. So I'm not going to hold that. That's not part of my gold portfolio. But my sense is we're probably headed towards like 2,200 this month. Maybe, you know, somewhere around there. And we see a decisive close above 2,100 for the first time in March. But let's see, we've got 3 plus weeks to see if that happens. But when that does, Roger, it's extremely important, right? Because everybody is just written gold off. Look at the miners and all this stuff, like gold's an archaic relic. And also, as you know, I'm a very big Bitcoin bull. But the move in the commodities, the precious metals and gold, with a breakout of gold above 2,100, especially with 3 or 4 monthly closes in a row at new highs, where it's kind of done this in this stealth manner. And then that would actually make sense for me for what is coming next. You get that decisive close above 2,100. I mean, I think if we go into the 21s, 2,200 level during the month, it's going to be, well, if we go above 2,200 during the month, it's going to be tough to see it closing below the 2,100 or at least at a decisive high at the end of the month. That being said, gold in all of my research is headed for, at a minimum, 2,600 to 3,200 within 18 months. That's a massive move for gold.
You think about this move being kind of the interesting one because, you know, what we've seen, if anything, I know we've just had a relatively poor manufacturing ISM, just drifted back a couple of points. But overall, the general talk is of pricing out the rate cuts. It's talking about a reacceleration of the US. All the sorts of things which actually should normally be a headwind for gold, because gold loves the loose conditions. It loves fiat. It loves, it basically loves policymakers who are out there worrying about a slowdown and ramming all the channels with liquidity. If anything, the market's starting to think, actually, maybe there won't be any rate cuts at all this year. So if anything, gold has done remarkably well, considering that actually most of the sort of fundamental features of the market over the last month, barring that ISM, have been ones where you go, not the greatest conditions for gold.
I think, that's partially the reason why I've kept it on the front of my radar, not just the fact that I write a letter about it, but, the reality is that, look, I've been vocal with even like my readers and subscribers that I've got, besides some safe asset classes and uncorrelated asset classes, but that's a minority. So, but half of my net worth, going above and beyond below 50% for the last 5 years has been, metals and mining stocks versus crypto. And so when you've got this type of a move in crypto, I can completely get distracted and say, I'm making so much money over here. Screw this gold mining spot, because this stuff isn't even moving. It's in its 3.5 year now. It's actually at that point 3.5 years, because August 2020 was when we had topped out on the last rally in gold mining stocks. And this also includes, by the way, silver equities. And I think there's also a very real correlation between gold and precious metals mining stock performance, and eventually base metals and critical metals, and how that stuff reacts as well. But I've kept it on the front of my radar because of how gold is held in there in this, even into the rising rate environment. I mean, this is where I had an argument against the crypto folks in 2021 when I had all these huge profits in a very volatile asset class. I moved a lot of that over into gold with the argument that this is a store of value. This is the store of value. Bitcoin is, people talk about it as a store of value so they can wrap their head around it. But it isn't a store of value for me even right now. Yes, it's not anything you could call it a store of value if it goes up against your fiat in a period of time. But if it goes up 1,000% against your fiat, are you calling that a store of value? I'm calling that a freaking grand slam. I'm calling that a venture capital type return, and I'm still looking for that in crypto, and the risk is correlated. So fast forward from November 21 to November 22, and I distinctly recall this. And the crypto was destroyed. Bitcoin had gone from in the 60,000s down into the teens. The NASDAQ was down, I forget the numbers, but destroyed. S&P was destroyed. Everything was destroyed. And I looked at my physical gold price, Roger, and I think it was in the 1900s or so around then, maybe dipped into the 1800s. And it was down 1% from November 21 to 22. You guys can check the charts, but I believe that was in my head as a metric that I said to myself, thank God I put a bunch of money into the real store of value during a really rough time out there on the defense, okay? I was very pleasantly surprised by a rapidly rising rate environment, the way that gold hung in there. That was very extraordinary, to your point. And even now, with what's happening, you would still theoretically think, gold could easily be at 1,700, and it wouldn't even really make anybody say it's not acting normal. Gold is acting very, very strong. And I think it's about to heat up even further, because there is a narrative, if you want to get into it, there's a narrative that's taking place that's overcoming everything that we've looked at in traditional finance.
And what do you think is going to be the level which gets these poor, lonely junior miners going? Because, if you'd said to me 6 months ago, we're going to get gold at 21.20 in March of 2024, I'd have probably thought that the miners would be doing better. And it feels like, as you said just earlier, we've had this move, and it, even with the gold breaking out, it's hardly had any mention. So you get this sense that gold at the headline has broken out, but no one's talking about it. And because no one's talking about gold, I guess no one outside of the gold bugs, etc., and those who always have a standard allocation to it, have got anything. And when you drill down further to people who really used to love the mining stocks, they're out, they don't care, they've been hurt too much. Do we need gold at 2,500 before these miners get going? It seems that, it needs more than just gold going up. It needs a whole change in sentiment to get these miners to actually start moving, because at the moment they're just bouncing off effectively, I think it's the 1-year low.
What changes sentiment is a price increase and flows. And one thing that is really interesting about the timing of our conversation is this. Just on Friday, we started to see volume come into gold miners. There were a handful of the really, really tiny gold juniors that I own. They saw price increases, but it wasn't the price increase that got my attention. It was the volume. There was volume coming in. I've been taking money virtually every day the last few days, not like tons of capital, but small, positions that I've had, the shit coins and stuff like that have gone up quite a bit. And I've trimmed those profits and I've sent those over in my brokerage account, and I started buying, all of these stocks. So let's see, Roger. It's going to be a little bit relative in the sense that, do we need to hit a bell at 2,500? I don't think so. I think it's going to be just a much better environment. If and when we go up to even 2,300, I think we're going to see stuff coming alive, different ones every day.
And it's probably a bit like Rick Rule was saying, which is that the high quality end of the junior miners probably kind of were really bottoming in 2022. The good ones, as you say, it sounds like they're already moving. The volume's coming through. Some of them have already started to motor. And I guess if people are interested in the sector, they're motoring from quite a low level. So if you believe that gold has broken out and now has legs, these things are now going to be potentially playing catch up. Do you think this is just the headline acts making their first move, and that actually now we've got to start thinking about over the medium term, the other stuff might start following with a higher beta?
That's how we usually work. And I think GDXG is a great place to start for people, especially with this audience. If you want an allocation in a sector that has been bludgeoned to death for 3.5 years, has proven itself for so long as a cyclical sector, and you're out there looking for value, I'm sorry, but I'm not going to find it in the big 5 or 7 in the S&P or QQQ. I just can't do it. I could never bring myself to, to buy that stuff seriously unless I was a sheep pension fund manager or fund manager that needs to be very close to mimicking. I'm sorry to call them sheep, but it's more of that's their job. But even when you see a turn that's for real in these markets, what I tend to experience is that all of a sudden the selling stops in those little shit juniors, penny dreadfuls, or shit coins, and they start to float higher. They start to float up slowly. They haven't seen any volume flows yet, but they've seen the leaning on them and the trend of them going lower sneeze. So sometimes you could have some of those companies that can float higher, 50, 100%, while the bigger ones are moving up.
Do you think that has been part of the problem for the junior gold miners, in that, they used to be the only high octane game in town a long time ago. And recently, and I'm talking the last decade, we've had obviously the crypto space, which has been inundated with lots and lots of different opportunities. Plus we had cannabis, which sort of came very excitedly, was it 2018, 19, and then went quiet again. But for the retail investor who kind of wants to find those high octane plays, there have been more alternatives. And now, if anything, particularly the younger generation, the new generation of investors probably don't really think about gold and silver, not because they dislike it, not because they're kind of like, oh, it's just they've grown up on something different. And so there is a whole pool of capital which is just funneled into the crypto space, and probably will never go into that mining space, not for any other reason apart from, why bother if you can get 650x here, chase 100x in something that you've not done any research on?
I think for sure there's been some impact there, no doubt. There is no doubt in my mind right now that some of the decline in the capital escape from gold itself is making its way right over to Bitcoin. And we're seeing the needles move already. So what's going to happen when Bitcoin's at 2, 3, 4 trillion and gold's at, whatever it is? So just from the king perspective, I've already seen some of that where we've, people chase returns, they want action. When you look at the juniors, they're so, they've been so neglected for 3.5 years. And a big part of me wants to say, well, yes, it's because that the action in some of these other areas has made people avoid them. I do believe that's the case, but it's not the fundamental case, because I remember distinctly from October 2011 when we hit, a massive all-time high in metals and mining, which is the same month that I launched the gold investment letter, by the way, and had to deal with a
Ringing the bell.
we ring the bell. I rang it with a 4+ year brutal bear market. But I'm like, the only market this kind of reminds me of is in 2015 junior environment, where I was picking up companies that had some real gold and nickel assets in Sweden for a 400 grand market cap. And I'm like, and it was at like a half a penny a share. And that ended up going to 40 cents, by the way. So there were similarities there, but gold has always, and the miners have always been very cyclical. So this is not out of context or character for this arena. If you look back to the last really bad cycle, it was a bit longer than this. And I don't know if it was quite as brutal, but it was pretty close. From 11, which was an all-time high and all this stuff, down to the lows, which I think we started scraping those lows in the summer to the fall of 2015 before things just popped. In late 2016, the GDXJ, for example, tripled in 7 months. I do not expect a repeat of that, and I wouldn't want to see it, because to me that was more of like a bear cycle violent, counter trend. And then we went back into getting slept into another low. This time, my sense is that we're going to have something much more sustainable, because let's look at this stuff realistically, Roger. I'm very bullish on crypto and Bitcoin and everything else, but hey, a couple things to keep in mind. Over the weekend, or over the last week, 2 things happened to remind me about how fickle this shit is. A, when Bitcoin went up to 64,000 last week with a bunch of retail pumping in, I went to go check my Coinbase account and actually shave off a little bit of Bitcoin, because I'm very, very, very exposed to that sector. And my balance said 0. Coinbase crashed. They crashed again yesterday, actually, with this move. And also over the weekend, there was a lot of action in crypto, and where I live in Miami Beach, the internet and the mobile networks went down for like 6 hours, and I couldn't do anything with my accounts. And it was a good reminder that, there are still glitches in this new technological digital vortex that we've been sucked into. And frankly, you and I are not even going to be able to get in there to play. We don't have the resources, the minerals, and the metals to build stuff like the computer we're talking on, and the camera and the microphone. And there's a shortage of that stuff coming up in the world, because there's been underinvestment for decades at getting this stuff out of the ground, which A, is not easy, B, costs a lot of money, and C, will create these boom bust scenarios. What I did in 2021, I had such large profits in the crypto space. What did I do? I said, I got to start moving this stuff into real estate and gold and cash, because it's crazy for me to have this high beta stuff at this point. When Bitcoin's up at 200,000 or something, and it's gone parabolic, and your Aunt Nella is calling you like, hey, how do I buy that Bitcoin? You may want to own some metals in the ground.
It sounds like you got the feeling that this breakout in Bitcoin has legs, because one thing I thought was interesting is a measure of social media interest in Bitcoin was kind of at the multiple year lows. It's not the euphoric, everybody piling in type of thing. It feels that actually that interest is not even anywhere, well, it isn't anywhere near close to where we've seen in previous big cycles. So that suggests that the sentiment is such that confirmed breakout could actually have legs, because the momentum in sentiment has to yet turn and start going higher, never mind peak.
We should have had the Roger index. Like when we started talking about you getting some Bitcoin exposure, where was that price and where does it go? Did you happen to grab any, by the way, yet or no?
Oh, God, no, I was stuck in Paris eating snails the other day, and since then I've been working. So it's I have my priorities.
Fair enough. Okay. But to your point, yes. I mean, you would call this like more of you would think smart money coming into Bitcoin, right? And I've said this for years. The reason Bitcoin has a lot of upside left is this is like a global low float penny stock that applies to every single person on planet Earth. And everybody like me who held through what we did hold through the down cycle and then bought more coming out of that and everything else, like we're just not interested in selling our shit here at BlackRock. I'm sorry. So and there's no supply there. And the price increase is happening because the money wants in it. So it's going to be a crazy ride. I mean, we're going to have plenty to talk about with this for the coming months because nothing is going to go in a straight line. And, you look at like right now with the meme tokens and everything. I actually put out a cautionary note on phenomcrypto.com yesterday and said, look, if you're aping into dog with hat and bonk and, Shiba Inu right here, you're a moron. So like pump the brakes a little bit, right?
What we're going to chat about next week is exactly this, because I know we've talked about it before, but I think next week we'll do the same thing, which is talk about how your experiences in this. Because what's interesting is we saw Rick Rule's experiences, which were very, very cyclical. We heard about Rob McEwen's experiences, which were very cyclical, very volatile. Your experiences, as you've mentioned, you love your volatility, have been very volatile. I think next week we'll just talk about, okay, your experiences, how you've applied that and how you'll continue to apply that to things which are starting to move around again, which is the reason why we started this series when we did, because we're hoping we'd see new highs in gold and new highs in Bitcoin, and then hopefully see this vicious, volatile trading environment, which you love, and other people might go a bit too volatile for me. Next week, we'll talk about that and your learnings and how you approach it again.
Cool. And, I give you crap about your Bitcoin exposure, but to your credit and the team's credit over there with you guys, when we did start talking about doing this series, the thought was like, look, nobody's looking at gold or miners or metals. And we think it has got the chance that we could talk about it now with our listeners and give them an opportunity to be profitable, through going forward. And that also included the crypto narrative, which wasn't really quite clear yet. So kudos to you. And yes, that would be great. I'm looking forward to just chatting about what the really successful legends, gave to us for nuggets the last couple of weeks.